Hello and welcome to the special segment called MC Pro Select Stock of the Day. In this segment, we bring to you fundamentally strong stock ideas that you can consider in your portfolio. So today's stock of the day is Galaxy Surfactants. If we talk about the company, then it is India's largest oleochemicals manufacturer focused on personal and home care industries. More than 50% of the sales come from MNC customers and 60% of sales come from outside of India. It operates through plants in Jhagadia, Tarapur and Taloja. Now, sharp decline in stock price since September 2024. In the last few quarters, the company has been facing the multiple challenges. In fact, the supply side hurdles, tariff uncertainty and demand moderation in domestic market have been the key issues. If we talk about the stock, then the stock price had corrected by more than 30% from its September 2024 high before rebounding recently. In fact, the domestic demand for performance surfactants weakened. The domestic market, which makes up nearly 40% of the revenue, continues to be sluggish. Inventory rationalization for the general trade channel and weak urban consumption has impacted. Further, a sharp pickup in the key ingredients, including fatty alcohol prices, have moderated the demand for the performance surfactants. In the quarter gone by, there was a 1% drop in domestic sales volumes after a sharp fall of 7% in Q3 financial year 2025. Now, sequentially, the sales volume are stabilizing. If we talk about the Africa, Middle East and Turkey region, then the sales volume growth is flattish. Now, AMET region, constituting 24% of the sales, had been impacted by supply side issues like longer lead time, freight cost as well as currency volatility. Now, bulk of these challenges have subsided, particularly easing of the freight cost, and therefore the company is optimistic about gradual revival in this region. While the trade tiff with Turkey is monitorable, the impact on the business is expected to be minimal as the exposure is limited. In fact, the elevated fatty alcohol prices may create new operational challenges. Fatty alcohol is the major raw material for oleochemicals. Its prices have gone up by 40% in the last 2 quarters, leading to a surge in the final product prices, which in turn is weighing on the demand. Now, the management expects one more quarter of elevated prices due to the production shutdown of palm kernel oil manufacturers in Southeast Asia. Other key challenge for the company is the price differential between the surfactants based on the fatty alcohol and those based on crude oil. Now, the company is witnessing the few reformulations happening at the client end to take the advantage of the price difference. Now, the Galaxy Surfactants is preparing itself for this new demand scenario. The rest of the world, largely the US and the Europe segment, remains on the firm footing. The rest of the world business posted 9% volume growth in Q4 alone and double-digit growth in financial year 2025. This segment constitutes 36% of the sales. In fact, the management remains optimistic about demand in advanced economies, particularly in the United States. If we talk about the growth guidance, then it reflects the near-term risk. The key risk for the growth is the delay in the trade deal between India and the US, and the availability of the vessels remain a key monitorable. Also, the domestic demand recovery and normalization of fatty alcohol prices are a key watch. These uncertainties are reflected in the company's volume growth guidance of closer to 6% for financial year 2026. This is the lower end of structural medium-term growth guidance of 6 to 8%. That said, the EBITDA per ton range guidance is intact at Rs 20,500 to 21,500 per ton. With that, it's a wrap. For more such updates, keep watching moneycontrol.com and please like, share and subscribe to Moneycontrol's YouTube channel.